Hello, and thanks for tuning in to our conversation with Tina Barrett, Director and Farm Financial Consultant with Nebraska Farm Business Incorporated. Tina grew up on her family's farm near Hoardville, which is north of the interstate between York and Aurora. And I've actually been to Hoardville. It's a nice little community. She's going to be answering some questions today about the March 1st deadline for farmers and ranchers to get their taxes filed. Tina, thanks so much for joining me. Well, I guess the first question out of the chute is that March 1st deadline going to be extended for farmers and ranchers?
It's hard to say. Right now, we have a March 1st deadline. So unless you file an estimate by January 15th, we have to be planning that. I think it's a reasonable possibility that we'll be looking at a deadline extension, but I don't know. We've seen those as late as February 28th, which is a little bit late. What we do know is that they're not accepting any tax returns until February 12th. And so that's only 2 weeks prior to that March 1st deadline so that we can even start filing them. And that's about 3 weeks later than normal. Mm-hmm. So I think some of those things lead us to believe that there's a potential, but right now we have to move forward as if it's happening.
I guess, what are some of the key tax issues farmers and ranchers need to be aware of as they get ready to prepare their taxes for this 2020 year?
Well, in a way, there hasn't been a lot of changes, and in a way, everything is different. So things that are different than normal, we certainly need to be aware of your PPP loans that you received in 20, and if those have been forgiven and those kinds of things. Now, we did get clarification that those are not taxable and those expenses are fully deductible, so that helps. But there's still a lot of questions that we need to make sure we clarify in that. So that's one thing that we're asking producers to send in, is those documents that we have that in our file. We also have the employer retention credit, which we haven't given a lot of attention to, even though it was authorized in the CARES Act last March. Because if you took the PPP loan, you couldn't take the ERC. Well, in December, they authorized both. So that one here, we have a filing deadline on the 943, which is the employer's form for farmers, that credit has to be filed on. That has implications on your 20 tax return. So if you take that credit, then we have to do some adjustment to expenses on your 2020 tax return. So there's things like that are certainly significant and hit or miss as to whether or not they're going to apply. The other thing that's just coming on our radar is the filing requirements for the Nebraska real estate credit. There's going to be some additional information that we're going to have to know in order to put that credit on the return. So, those things are going to certainly make it a more difficult filing season.
Undoubtedly. How would CFAP 1 and CFAP 2 payments be taxed? And what about the last MFP and ARC PLC payments?
Yep. So everything other than a PPP loan is taxable. Okay, so that's the only exception to the normal rule that we have taxation. So certainly anything, again, that was received, so a CFAP 3 payment that comes here in the next month or so, even though it was authorized in 20, as a cash basis taxpayer, that's not taxable until 21. So anything that you received in 21 is a government payment. That includes the $12,000 that many received from the state of Nebraska that started out as a livestock grant and then transitioned into others. Also taxable, just a government payment.
When we look at the economic impact payment, the EIP payment affecting farmers and ranchers, will that affect, I guess, their income taxes this year?
Yep. So that's another exception to the rule, and the fact that is a tax credit that they gave you in advance, so it is not taxable income. So it's really important that you don't put that and your PPP loan in your income statement. You don't want that as part of the rest of your government payments so that it doesn't accidentally get taxed. But we still do have to know what you received both last April and again in the last month, because we have to reconcile that on your 2020 tax return. What that means is, if it's a 2020 tax credit, so they based it off of either 18 or 19, depending on when you filed. So if you qualified in those years but didn't qualify in 20, you don't have to pay it back, so you get to keep it. But if you didn't qualify in 18 or 19, but you would qualify in 20, we get to take it on your 20 return and add it to your refund, or reduce what you pay. So we have to know what those payments are amount. And that doesn't matter if you got a check, a direct deposit, or a debit card. We need to know that amount.
If farmers and ranchers receive a PPP loan and an EIDL advance, How will these impact the 2020 returns? And when should they apply for forgiveness for those loans?
That's the golden question. So let's back up, because originally what we thought about PPP and EIDL were that you couldn't get both. So if you took the PPP loan before your EIDL advance, then they were going to reduce your forgiveness by the amount of that EIDL advance. And if you took the EIDL advance before the PPP loan, they reduced your loan. So in December, again, they came back and said, forget that, you can have both. And so for loans that were forgiven, but didn't have the EIDL advance, what's our assumption and what we're hearing from SBA is that they're going to automatically send that money back to the banks. So they'll forgive the remainder of that. If you haven't applied for forgiveness yet, that's fine. So you don't have to read, you can make, there's new forms. So make sure you use the new forms that don't ask you to reduce that forgiveness by the EIDL advance. EIDL advances are taxable. So we do have to pay tax on those, but we don't have to reduce the PPP forgiveness.
So are there any other COVID-19 provisions that farmers and ranchers should consider when they're filing their taxes in 2020?
Well, I think thing we didn't talk about in that, well, the one thing we haven't mentioned is the Family First Act allowances for paying employees to work when they needed to be home with COVID. So there are credits available for that. It's pretty complicated. But if you did have an employee that you paid to stay home, then you can take a credit for that on your 943 also. So it's, again, something that you need to let your tax preparer know, or whoever is preparing your 943, if there was something like that happened in your operation this year. So there's a couple different options in there, but we want to make sure that you get that if you did keep your employees on payroll, even though they had to be quarantined or at home.
Are there any tax strategies, I guess, farmers and ranchers should consider this year that might benefit them in their tax season in 2020?
Yeah, I think there's so many things to pay attention to with all these new things, and it's going to be interesting to see what passes in the next month or two. Even by March 1st, we might know some new things that coming down the pipeline. One of the things that we've talked about with a lot of producers is just with the sheer amount of money that's come out of the federal government this year, it's likely that taxes are going to have to increase. The long-term course of your business to maybe back off depreciation this year, pay a little bit more tax now, and let that depreciation in the future offset higher tax rates. Some things like that, again, it's a hard thing to guess. We don't know when things are going to happen, but at some point, this money's got to go back to DC in some form to keep the budget in some sort of balance. So it's something to think about. We also, don't know exactly what to say about PPP forgiveness. We kind of were really holding pretty fast to waiting as long as possible. I know that creates issues for banks, but we don't know what the next round of stimulus is going to look like. To be, this last bill that passed in December was definitely a penalty for those producers who had applied for forgiveness already on their first loans. We don't know if something like that would be in the next round. It's hard to guess, but what we do know is that the law gives you 10 months from the end of your covered period to apply for forgiveness. So we have time. So there's no rush in it. And so but at this point, there's nothing that we know that would be beneficial for holding off. So, all those kinds of things come into play. And so many of these things are very operation specific. So it's real important to talk to your tax preparer about your operation and really see how these things fit. And I think it's going to be important that you're patient with your tax preparers. They have a big job, and it's not been easy to keep track of what needs to happen. And so there's a lot going on. And so I would say be patient and be understanding that there's a lot happening, and we're all trying to do as much as we can as quickly as possible. But there's a lot to be done in a short amount of time with this last bill.
Tina, thank you for your insight and your expertise. I appreciate your time today. Thanks for joining us.